It's Monday. We're going to talk business today. Not very exciting, but I do want to talk about banking. As you all know, we've had two major banking crises. There's more going on with BRICS, but I'm going to focus right now on the breaking news of what happened with SVB and the Swiss bank specifically, and how that will affect mortgage rates. So, with those two recent developments, with the first the US and then the Swiss, we've obviously had shockwaves go through the financial sector, and I think you need to understand how this affects us. Fixed mortgage rates generally follow the 5-year Canadian bond yield. A growing number of investors are concerned now with the instability in the banking sector and are fleeing those government-backed bonds. So an increase in prices, in bond prices, will yield means lower yields. Let me repeat that. An increase in bond prices means lower yields, which means lower interest mortgage rates. So on Monday, February Consumer Price Index was released, and by StatsCan, showing that we've had a sharper than expected deceleration in inflation. I'm just going to read one of the statements here. Because this has led some industry experts, including the ING Chief International Economist James Knightley, to speculate that interest rates have peaked and that a rate cut could be coming soon. So back in January, the BOC indicated that it expected to hold the policy interest rates at its current level, conditional on economic developments. This guidance is likely to remain in place at the next BOC meeting on April 12th. Take note of that date, with the BOC likely to sound even more cautious in the wake of US and European banking woes. We still think the next move in the BOC policy rate will be downwards, and that the first cut is likely to come before the end of the year, Knightley wrote. A drop in Bank of Canada's benchmark rate would bring down variable rate mortgages and could further lower interest rates on new fixed mortgages as well. Still, no one knows ultimately the certain path what the central bank will do next and how this crisis will play out and ultimately impact rates. So bottom line, we could see some more major volatility in the next coming months with mortgage rates. Pay attention. It's very important to pay attention, especially for those of you that have variable rates. I don't want to see you get stuck. I know of quite a lot of people that have been stuck and are now forced to sell their homes. So that's all. Peace out. I will be following this up with what this could mean for you directly for buyers, sellers, and homeowners. So stay tuned for my next video and share your comments below. Ciao for now. Love y'all. Bye.